Hello and welcome to Explain the Charts, your go-to channel for no-nonsense technical analysis. Today is November 28th, 2025, and we're diving deep into the very turbulent world of Bitcoin. The market is sending some incredibly mixed signals right now, and the news headlines reflect this perfectly. On one hand, we're seeing reports of Bitcoin roaring past $90,000 and rebounding above $91,000, with some analysts pointing to new Wall Street crypto products and bets on Fed rate cuts as fuel for a new rally. This paints a very bullish picture for the near term. However, on the other hand, the bearish sentiment is just as loud. We're also seeing headlines about Bitcoin facing its worst month in years, with massive ETF outflows totaling billions of dollars. Many articles are highlighting the brutal 36% correction from the record high of nearly $126,200, which was set in early October. Analysts seem completely divided, with some warning of a potential drop below the $80,000 level. The key theme in the news is that Bitcoin is at a crossroads, with the $84,000 level being cited as a critical support zone. This clash between bullish recovery news and bearish correction warnings makes a deep dive into the charts more important than ever. So, let's switch gears and see what the price action itself is telling us. Alright, we're starting here on the BTCUSD daily chart to get the big picture. Looking back over the last several months, we can see a powerful uptrend that began after the flash crash in early August 2024, where price found a bottom around $49,000. From there, we had a massive run-up, culminating in that record high of $126,296 on October 6, 2025. This peak is our major, long-term resistance level that bulls will eventually need to conquer. Following that peak, the market saw a dramatic reversal, just as the news described. We experienced a swift and brutal correction, with price shedding over 36% in the following weeks. This downtrend found its first major floor in late February, briefly dipping below $80,000 before finding support. The most recent and significant test of support happened just last week, on November 21st, when the price hit a low of about $80,800. This area, from $80,000 to $84,000, has now proven itself to be a critical demand zone. Bulls defended this level aggressively, and since then, we have seen a significant bounce. This bounce is the recovery that the bullish news articles are reporting on. A key resistance level to watch in the medium term is the psychological barrier at $100,000. We can also see a band of resistance from previous price action between roughly $104,000 and $108,000. The bullish case here is that the correction has run its course and a major bottom has been established at the $80,000 level. This could be the start of a new leg up to retest the all-time highs. Conversely, the bearish case is that this is merely a relief rally in a larger downtrend. A failure to break through significant resistance could lead to another painful leg down. We need to see sustained buying pressure to confirm a true reversal. Volume during this bounce has been moderate, which is something bulls would like to see increase as price rises. To get a better look at this recent dramatic price action, let's zoom in on the daily chart starting from the beginning of October. Here you can clearly see the blow-off top on October 6th, followed by several large, high-volume red candles confirming the distribution and selling pressure. Notice the candle on November 25th, a huge red candle with significant volume, which marked a capitulation event before the bounce. The subsequent green candles show the start of the recovery, but as I mentioned, the volume isn't as explosive as the selling volume was. This indicates that while buyers have stepped in, conviction for a full-blown reversal is still building. Breaking above the high of that big red candle, around $99,000, would be a very strong bullish signal. Now, let's try to look at a shorter time frame. Unfortunately, our 1-hour data is a bit dated, covering the period from November 7th to the 10th. However, we can still use it to see what consolidation and a breakout look like on a lower time frame. During this period, the price was consolidating around the $102,000 to $104,000 range. After several tests of resistance, we saw a strong impulsive move up towards $106,000. This is a classic example of price coiling in a tight range before expanding with volatility. This pattern of consolidation followed by a breakout is something we should look for in the current price action as well. Now let's move to a chart that gives us a real-time view of what's happening right now. Okay, this is the 15-minute chart, and this shows us the very recent price action from November 22nd up to today, November 28th. This is where we can see the rebound in high definition. We started this period consolidating at the lows, chopping around the $84,000 to $86,000 level. This shows the battle between buyers and sellers right at that critical support zone we saw on the daily chart. Then, on November 26th, we saw a very strong, impulsive move upwards, breaking out of that range and pushing all the way to $90,000. After a brief consolidation, the uptrend continued, and just yesterday, we broke through the $91,000 level, peaking near $92,000. This is the bullish price action that has the market talking. On this short-term chart, we are clearly making a series of higher highs and higher lows, which is the definition of an uptrend. The immediate support level to watch is the breakout point around $90,000. As long as we hold above this level, the short-term bullish structure remains intact. The key immediate resistance is the recent high near $92,000. A convincing break and hold above this level would open the door for a move towards our next major target, which is the psychological $100,000 mark. Traders on this time frame should watch for any break in this market structure. A failure to make a new high, followed by a break below the recent low around $90,000, would be the first warning sign that this rally is losing steam. Let's pull back to the daily chart one last time to recap and look ahead. The battle lines are clearly drawn. The most critical support zone sits between $80,000 and $84,000. A break below this would be extremely bearish. On the upside, immediate resistance is the recent high around $92,000, followed by the major psychological and technical resistance at the $99,000 to $100,000 area. So, what are the possibilities? I see a bullish continuation as the most likely scenario, maybe a 60% chance, given the strong defensive support and the emerging short-term uptrend. This is reinforced by the positive news catalysts. For this to play out, we need to see a decisive break above $92,000 and a push towards $100,000 on good volume. A bearish reversal, I'd place at around a 30% probability. This would involve a rejection from the current levels, a fallback below $90,000, and a retest of the $84,000 support. If that level fails, the downtrend resumes. There's also a 10% chance we simply chop sideways between $85,000 and $95,000 as the market digests the recent moves. The main things to watch are volume, how price reacts to the $92,000 and $100,000 resistance levels, and any new developments regarding ETF flows. And that wraps up our analysis for today. Please remember, this video is for informational and educational purposes only and is not financial advice. The cryptocurrency market is extremely volatile, and you should always do your own research and consult with a professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.